Hey guys, it's Adrian here, the Canadian in a t-shirt, and today I'll be breaking down why I avoid crypto, NFTs, and other speculative investments. And I'll share my thoughts on YouTubers and influencers pushing these get-rich-quick schemes. This isn't the kind of video I usually make. In fact, I was working on a taxes video, but with the FTX scandal and bankruptcy and the ongoing crash of Bitcoin and other cryptocurrencies, I had to jump in and share my thoughts. In the first half, I'll focus on the dangers of crypto as well as NFTs, penny stocks, and hype stocks, and how these are speculating, not investing. That's a very important distinction. In part 2, I'll share my criticism and warnings of financial influencers who are frankly being irresponsible and predatory. You guys know me, I don't like being negative. That's why I've never spoken about crypto in over 3 years. But this space has gotten out of control. And now real people are losing real money because they trusted someone online. So I apologize if this video feels a little more unscripted and emotional and less of a structured lesson plan, which is what I normally do. But I had to get this off my chest, and I hope it helps some of you through these difficult times. Before I jump in, if you guys are invested in crypto and these speculative assets, that's okay. I'm not calling you dumb or claiming that I'm smarter or I'm better. It's your money. You're allowed to do what you want with it, but you have to recognize the risks involved here. I just have to push back against the narrative that I see far too often online, that crypto is a sure thing and guaranteed to triple your money by next year. I don't want anyone to lose money. I hope that I'm wrong, but in case I'm not, please just hear me out, and then feel free to prove me wrong in the comments below. First off, what is the difference between investing and speculating? Investing is when you put money aside today with the expectation that you'll be able to make more money in the future. And the future does not mean tomorrow or next month. Investing is a long game. You're not going to get rich overnight. You are buying a quality asset that has true value, and its value should grow year after year. That's how wealth is made, by investing in the long term. I made a whole video on how to build wealth step by step, and investing was step number 4, so check that out. With investing, you are putting your money into a real asset. This could be a stock, an ETF, real estate, or even your own business. These are producing assets that actually make money. But with speculating, you are trying to get rich quick by buying assets that don't have real value, and so you take on huge levels of risk. To me, speculating is essentially gambling. You're trying to get rich quick and the odds are against you. Plus, a speculative asset like crypto or an NFT doesn't have any intrinsic value. They're not worth anything real. They're only worth what people think they're worth. More specifically, their only value is what someone is willing to pay for them. To a certain extent, the same thing could be said about stocks. That's why we see the stock price change up and down throughout the day, because enough people are willing to pay more or less for that stock. But stocks still have some inherent value. Remember, what is a stock? A stock is a unit of ownership of a company. When I buy a stock, I own a small piece of that company, and that company makes money. As the company sells more products and services, it grows and makes more money. Now the company is worth more, and so my stock is worth more. That's why stocks grow over time, because I own a part of that company, and companies earn profit. When I buy Apple stock, I'm an owner, and now all 80,000 employees of Apple are working day and night to make me money. And 10 years later, I can sell the stock for a profit. That's investing. Instead, if I buy a Pokemon card for $1,000, it doesn't do anything. It doesn't produce value. It doesn't spit out more cards. It just sits there. Is it really worth $1,000? It's just paper and ink. So how can I make money off it? The only way is to convince someone to buy it from me for more than $1,000. That's speculating. I'm hoping to make money quickly by selling it at an even higher price. Even though it's the same card, nothing has changed. I didn't improve the card, but if I can build enough hype and excitement, someone will buy it. And I'm sorry if this upsets you, but crypto and NFTs are the same. They don't produce anything. They just sit there waiting to be sold to a higher bidder. At least Pokemon cards actually take effort and materials to produce. It's a tangible physical item. A crypto coin is produced digitally out of thin air, and now it's arbitrarily assigned value and worth? By the way, I didn't spend $1,000 on this. That would be insane. It is a first edition Machamp card for whatever that's worth, but I got it in a starter pack back in 1999 as a kid. My mom bought this as a toy, not an investment. So crypto and NFTs are non-producing assets. What about gold? It's true, gold doesn't do anything, it just sits there. It doesn't make you more gold, so I wouldn't really consider it an investment, but it does serve a purpose. Gold doesn't grow value, it preserves value. It's considered a safe haven to hedge against inflation and market downturns. So how is it different than crypto? Well, gold has inherent and historical value. Why? Because gold doesn't rust. For thousands of years, we have treasured gold because it lasts forever. As centuries pass, the bones of kings will turn to dust, but their gold crowns will remain untarnished. That's why it has value. Sure, there are other precious metals like silver and platinum, but gold is gold. It has unique chemical properties that can't be replaced. But crypto is easy to replace. Just look at how oversaturated the crypto market is. Sure, the biggest players and most established cryptocurrencies are Bitcoin and Ethereum, but they can be and have been duplicated countless times. Why should I invest in crypto A and pay a high price for it when crypto B is identical to it and serves the exact same purpose? Just look at Dogecoin. It was literally created as a joke, and it copied the code from other altcoins. It wasn't special or superior. Then, for some unknown reason, it gained attention, and Elon Musk started tweeting about it, and this joke shot up in value, making him a lot of money. And now that Dogecoin has crashed by 88% since those highs, who lost this money? You guys, his fans. Elon Musk already made his money. He bought it for dirt cheap, hyped it up, and cashed out, and his fans are left holding the bag. That's how this works, but I'll come back to this later when I talk about trusting influencers. So gold is unique, but it's also scarce. There is a limited amount of gold buried in the earth, and you hear this all the time with crypto. Bitcoin has a limited supply of coins. That's why the demand is always increasing. I'm going to say this many times. Scarcity does not equal value. In basic economics, yes, decreasing the supply will increase demand and thus increase price, but there has to be demand in the first place. Real estate grows in price because there is a limited supply of land and populations continue to grow. But the demand is there because people need a place to live. Nobody needs a Bitcoin or an NFT. Just because a picture of an ape is scarce and one of a kind does not mean that it's worth anything. Compare this to the Ferrari 250 GTO, one of the most iconic cars of all time. There were only 36 of them ever produced. Why is this car worth $70 million? Yes, because it is scarce, but also because it is an iconic feat of engineering. It has cultural and historical significance to car enthusiasts, even 60 years later. I'm not saying to invest in luxury cars or works of art. That's another form of speculation, and you need millions of dollars to do it. My point is that scarcity alone does not equal value. When I say crypto and NFTs don't do anything, I'm not saying that they are useless. This is an important distinction. The underlying technology behind them, called blockchain, is useful and has practical applications. I was a software engineer for 10 years, and I personally led a few projects on blockchain and how we could implement it in the medical domain. I'm not going to get into technicals, but things like decentralizing data, ensuring the transparency and integrity of transactions, these have enormous benefits across all industries. Blockchain networks are certainly going to play a role in technology going forward, but not every problem needs to be solved with blockchain. And not everything built with blockchain is worth money. I lived through this, and I'll tell you that for years in the tech world, blockchain was a buzzword. Just saying the name was enough to drum up excitement with investors and open their wallets. I'm just saying, be sensible. Blockchain technology is exciting and has value, but don't get caught up in the hype, especially when your money is on the line. What about the financial uses of crypto? That's why most people are investing in it. They expect it to grow in value because it's the future of currency. Maybe it's technically possible, but we are nowhere near that point. It's far too volatile to be used as a currency. Yes, we have inflation and currency exchange rates fluctuate, but generally speaking, a dollar today is worth the same as a dollar tomorrow. As a society, we all agree on the value of a dollar. That's why we don't pay with gold coins anymore. With crypto, we can see huge swings up and down over the course of just days, let alone months and years. Look at the price of Bitcoin, easily the most established crypto and the most likely contender to replace the dollar. In the past year, it's dropped by 70% in value. Imagine if your savings lost 70% through no fault of your own. Yes, the dollar loses value due to inflation as the cost of living rises. Normally, inflation is around 2% per year, but as we all know for the past year, we've seen record high inflation, around 7 or 8%. This is a temporary measure, but it sucks, it's brutal, and I don't have to tell you how much of a strain that 7% inflation has on everyday Canadians. Now imagine if inflation was 70%. That's insane. Yet, crypto shills online will still tell you with a straight face that crypto is a hedge against inflation. They'll come back and say, well, what about exchange rates? They fluctuate all the time. Yeah, they do, but not by 70%. Look at the exchange rate of the Canadian dollar to the US dollar over the past year. We saw a high of 80 cents and a low of 73 cents. So if you exchanged at the worst possible time, your dollar would have lost 9%. That's the worst case scenario. And of course, if you exchanged the other way around, you would have gained 9%. If crypto only swung by 9% in a year, okay, now we're having a conversation and maybe crypto could be adopted as a viable currency, but that's not where we're at. Well, what about stable coins like Tether? They're designed to be steady and match the US dollar. They're not going to grow in value and they can't make you money, but they can be useful when sending money overseas. This can save you money by avoiding banking fees, currency conversion, wire transfer charges. I can actually see a real benefit to this, but it's still not perfect. We've seen lately the price of Tether dropping well below the US dollar. And don't forget one of the biggest risks. What if the crypto exchange itself goes under? We've seen this with Celsius and now FTX, the second biggest exchange in the world. Your money was frozen, you can't withdraw it, and once the exchange goes bankrupt, your money is gone. Even if your cryptocurrency wasn't risky at all. Even if you just used a stablecoin like Tether to send money overseas to your family, if you used FTX, your money is gone. That's because the crypto space is famously unregulated, and I'm so sick of hearing this like it's a good thing. Regulations are not bad. What's another word for regulations? Laws, which are there to protect you. Of course, you don't want too many regulations that slow everything down unnecessarily, but having no rules, no laws, no checks and balances is a disaster for everyday people. Regulations are the reason why bridges don't collapse on us. Regulations are the reason why we don't have lead poisoning in our water pipes. Without regulations, corporations will do everything they can to maximize their profits, and that means taking shortcuts and using cheap materials to reduce expenses. And when something goes wrong, who pays the price? You, as the consumer. And these rules and laws are even more important in the financial space, where the everyday person will have no chance without protection. If your credit card info gets compromised and they try to steal $10,000 from you, I guarantee you'll be grateful for regulations then. And I'm sure you've heard the story of the guy who forgot the password to his crypto wallet and lost $200 million. Too bad, there's no one to help, no regulations. That's freedom, baby. It's the Wild West, and that's what you wanted. Regulations are there to protect your money from theft, fraud, money laundering, pyramid schemes, scams. The list goes on and on. I don't care what promotion or interest rate a bank is offering me. If they aren't regulated and they don't have that CDIC purple lock, I'm not giving them my money. CDIC is a regulation which protects me. If my bank goes bankrupt, the federal government protects my money up to $100,000. Same thing for my investments. You guys know I love Questrade. I love Wealthsimple. Why? They are regulated by the federal government and insured under CIPF. So if something catastrophic happens and my broker goes bankrupt, my investments are protected up to $1 million. I don't care what another broker might be offering me. It could be a $5,000 sign-up bonus. If they don't meet the conditions to be regulated under CIPF, I'm not giving them my money. It's not happening. And you see this everywhere in the crypto exchange market. By no means am I considered a big YouTuber YouTuber, but even I, on a daily basis, receive dozens of emails from crypto brokers and exchanges offering to partner with me or pay me to promote their platform, and they're all junk. There's no regulations, no checks and balances, and if you give them your money, it's a scam waiting to happen. Seriously guys, you have to be careful. Don't get caught up in their promises of getting you rich quick. It's your money. Treat it with care. And regulations are the reason why we can even analyze stocks in the first place. When you look up a stock, you don't just look at the share price. You see the dividend yield, trade volume, market cap, earnings per share, price to earnings ratio. These are all metrics that we use to evaluate whether a stock is a good investment or not. I go over all of these metrics in this video here. And every quarter, every 3 months, companies must reveal their earnings report, and this is available to the public. So anyone can look up their revenue, balance sheet, assets, debts, expenses, net income, or net loss. Do you think companies want to do this? No, they have to reveal this information. They'd be happy to lie and paint a pretty picture to drive up their stock value. But there are regulations to protect the public, and that's a good thing. Even if it's bad news and the company is going into debt, they must reveal the truth. And if they lie, that's fraud, and they go to prison. They might throw a press conference and try to put a positive spin on it, but they can't lie about the numbers. And the numbers, these metrics and their track record, that's the difference between investing and speculating. There's always going to be a risk. Nothing is ever guaranteed. But with investing, you have reliable evidence to evaluate the worth of an asset, and then you take a calculated risk. But you have a reasonable expectation to earn a profit down the line. Without these metrics, you're just putting money in and hoping for the best. That's just gambling. You're rolling the dice with your money. I would say you're flipping a coin, but your odds are worse than that. And gambling is fine. Speculating is fine, as long as you know your limits and are prepared for the risks. It's your money. You are allowed to have fun with it. Just don't gamble your life savings away. Don't confuse gambling with investing. Investing is having a plan to make your money work for you and build wealth in the long term. Gambling is trying to get rich quick and hoping for the best. It can be fun, but only gamble what you're prepared to lose. So I know I've been bashing crypto and speculative assets, but what if I'm wrong? I hope that I am wrong. I don't want people to lose money. And in case that I am wrong, I hedged my bets. I put some money into crypto, but only a tiny amount, literally less than 3% of my portfolio. I'm not fooling myself. I am speculating, and that's fine, because if I lose it all, yes, it will suck, but I'll be okay. The vast majority of my money is in long-term investments, quality stocks, ETFs, and real estate rental properties. And these investments are making me money day and night. That is my retirement fund. I'm not gambling with my retirement fund, and nobody should. The few $1,000s I put into crypto is money I'm not depending on. I look at it as a fun experiment. I hope it pays off and I make a profit, but if not, I'll be fine. So let's see how I'm doing. Not great. Overall, my crypto portfolio is down 73%. This makes it easily the worst performing investment I've ever made, at least so far. Looking at the holdings, the vast majority of my position was in the big players, Bitcoin and Ethereum, but I also put a few $100s into Solana, Dogecoin, and Shiba Inu, just for kicks. They're all down between 67 and 94%. No one wants to see that, but it could be worse. At least I'm not seeing my entire portfolio down 70%. In fact, my stock portfolio is still up tens of thousands of dollars, even in the middle of a market downturn. Why? Because I've been investing for years. Time is your greatest ally when it comes to investing, as I covered in this video here, comparing my portfolio to a beginner's portfolio. So the question is, will my crypto portfolio ever recover? The answer is, I don't know, and nobody knows. There's no evidence to base our prediction on, one way or another. Remember when we talked about financial metrics for evaluating stocks, like price to earnings ratio, balance sheets, sales growth? None of that exists with crypto. A cryptocurrency isn't a company. It doesn't make money or produce anything. There's no profit or collateral assets to justify its worth or its future. With crypto, we only really know a few things: its price, its market cap or total value, its trading volume, and its supply. How many coins are in circulation? That's it. That barely tells us anything. If you ask me, will a stock recover? Let's say TD, Toronto Dominion Bank. My answer is yes. Not because I have a hunch, but because I have evidence that points in that direction. They have a solid balance sheet. Year after year, TD's assets increase and at a faster rate than their liabilities. The company is worth more. What about their income statement? Year after year, their revenue goes up and they make more money than they spend, so their net income goes up. Also, TD as a company has been around for almost 200 years, and they've never missed a dividend payment in 165 years. That's an incredible track record. TD has endured and grown through world wars, market crashes, recessions, periods of high inflation, low inflation, high interest rates, low interest rates. It's proven itself through good times and bad. But what about crypto? It doesn't have any of that to prove its case. If you ask me, will Bitcoin recover? I say, why should it recover? Bitcoin doesn't earn money, so why should it be worth more next year? The fans online will say, buy the dip, it always recovers. Okay, let's look at its track record. Bitcoin was the very first cryptocurrency, so if anyone has a strong history to fall back on, it should be Bitcoin. Well look, it only really has 4 years of real trading history to base this on. And let's face it, it was 4 years of good times for Bitcoin, meaning that it grew under 4 years of economically favorable conditions, years of low inflation, historically low interest rates, a lack of competition, and enormous hype and excitement. Now we're in the bad times, and we don't know how Bitcoin will fare. It's never been tested under these conditions. Again, I hope it recovers. I don't want to lose my investment, but am I putting more money in, expecting it to bounce back? No. I'm putting whatever money I can into quality assets that are profitable. So if your crypto portfolio is down 70% like mine, what can you do to recover your money? You can wait and pray, or you can convince someone else to buy it for a higher price than it's worth. And that leads us to the dangers of bad faith influencers. But this rant has already gone long enough, so I'm gonna have to save that discussion for part 2. Hopefully in a few days. I know this video was very different from my usual content. It wasn't exactly fun to make. I don't like being a negative Nancy or a party pooper. I started this YouTube channel because I love investing and I love teaching. If you've seen my past videos, you know how excited I get when I talk about building long-term wealth. I'm usually smiling like a dork for 10 minutes straight. I don't want to be making videos like this, but I think it's important to call this out. As a YouTuber or an influencer, whatever you want to call me, I have an audience that trusts me. And with that, I have a responsibility to warn you guys of these very real risks that we're facing with crypto and other risky assets. But don't ever blindly trust someone on the internet, including myself. It's your money, so do your own research and make your own decisions. Don't worry, after I finish part 2 of this negative rant, I'll return to my normal lesson style of videos. So thanks for watching, stay safe, and I'll see you guys on the next episode of The Canadian in a T-shirt. Bye guys.